Yeah, I can kick it off, hand it right back over to you. We're all here to talk about what I think is one of the most exciting developments that we've seen across the stablecoin space, really unlocking value not only for two protocols, but really for the whole ecosystem. And I think we're really blazing a trail here. And with that little bit of a teaser, going to hand it over to Adam Lawrence from RWA XYZ, who's going to be joining us today as our moderator. And Adam, why don't you kick us off with a couple of intros and then take the mic?
For sure. Thank you so much, August. And it's cool to be here, Kento and August. We've known each other for a while now, so excited to kick things off. So, Kento, you want to give a quick intro about yourself, about the protocol, about UXD?
Sure. First, thanks for having me. I'm the founder of UXD Protocol. Basically, how it started was I started UXD in mid 2020 or a little bit later in 2020. Before that, I was working in a cryptocurrency exchange in Japan, and I have a background in derivatives trading. Basically, what UXD is it's a stablecoin that's built currently on Solana, but we are also expanding into the Ethereum ecosystem. The way it works is we call it the mechanism that backs UXD is something that we call the asset liability management module, and we call it like ALM. And the way it works is very simple. It's basically that stablecoins, you can think of stablecoins as basically a token that's pegged to mostly it's USD, but it's a token that's backed to USD. So basically, if you have a token that's pegged to USD, you want that token backed by strategies that have low volatility compared to US dollar. So and basically like low volatility strategies, there's various low volatility strategies that can back the stablecoin. And what we try to do is we look for the best strategies that has low volatility but can earn some yield to back the stablecoin. I'll talk further about like how it relates to Credix and other protocols. But basically, we try to get as many low volatility strategies that have low correlation with each other to back the stablecoin. So that's what UXD is. Thanks for having me.
Awesome. And August, you want to go next?
Yeah, thanks, Adam. And I thought, Kento, your announcement back in September, I believe, of 22 on the ALM was awesome. You called it something like the end game of stablecoins. I thought that was so perfectly put. But yeah, super innovative design and excited to be a part of it. But on Credix, so what Credix is we're a decentralized lending platform linking institutional capital on-chain with fintech non-bank lenders off-chain in Latin America. And how we do this is by building out structured debt facilities to each of these fintech non-bank lenders using that institutional capital. And these lenders, these non-bank lenders, are then using that capital to distribute small business loans, some consumer loans, and out into their local economies. So providing capital where it's really needed most and unlocking capital in a much more transparent and fair way. And we find a lot of value in that. We're also able to provide a lot of transparency by using the blockchain technology where everything is fully trackable through wallet addresses, various scans. We're also built on Solana. And when you look at these individual structured debt facilities, they're typically broken up into multiple tranches where the non-bank lender themselves is going to be providing an excess collateral as the junior portion. And then in the mezzanine portion, we'll have what we call our underwriter. That underwriter is a traditional credit investment firm who comes in and leads due diligence and structuring on the individual deals on behalf of the investors. Now, they're also doing that after and alongside Credix's internal credit risk and structuring team, as well as our legal department, we have a full, robust off-chain operation that's going deep in the weeds on the sourcing, the structuring, both of the legal and the actual deal terms themselves. It's a really innovative design where I firmly believe that we're taking the best of both worlds, the traditional finance lending arms and the on-chain DeFi ecosystem, putting those together into what I believe is an end-to-end investment and capital deployment platform. Now, going back to that debt facility, what fills out the senior most tranche is what's called a liquidity pool. That liquidity pool is a more passive investment vehicle where it actually fills out the senior tranche of all deals that are live on our marketplace. So if you're looking at the marketplace with, call it 20 deals, which is about where it is today, your investment in the liquidity pool is going to be diversified across the most protected class of each one of those deals. So you have diversification and then financial protection, and then you have the double due diligence protection that I mentioned there from the Credix team and the underwriter themselves. Incentives are aligned from the fintech and the junior position, and then the underwriter in the mezzanine position who are subordinate to that liquidity pool vehicle. Today, that liquidity pool is yielding in about the 13.5% APY area. We target a 12 to 12.5% APY. So I'm sorry, it's a little bit higher today, but that is all paid in USDC, no token emissions, no inflationary tokenomics, all things I want to touch on a bit later, but pure USDC, double digits return on your investment. I lead our DeFi strategy and help craft some really exciting partnerships and get to work with really awesome folks like Kento, where I can just learn so much from him, his protocol, and this whole community. But Adam, before we go on, I know you and your co-founder are really building what I think is one of the best tools across DeFi. I said it to you the other day. I shot you a message. I was like, dude, I get so excited every time I get to go to RWA XYZ and use it. So take a moment, man. Tell us what you guys are working on, please.
Yeah, for sure. I'll keep it brief. So yeah, I'm Adam, one of the co-founders of RWA.xyz. We provide analytics on the entire burgeoning real world asset space. So there's lots of protocols like Credix and other ones that you know that are all bridging real world assets onto DeFi rails and allowing people to access normal sort of real yields, non sort of token based or rewards based, kind of like you're mentioning, August, that were previously all available in crypto. So yeah, we want to be the force that organizes and standardizes the information across all the protocols, making it easy for investors to discover deals, to due diligence them, and then as well as getting into the monitoring and other sort of portfolio activities. But yeah, it's basically it. You can head to that website now and you can see Credix's pools and all the underlying loans. So cool. Let's kick things off. Before we start, let's do a little disclaimer. So nothing discussed here should be construed as financial, legal, or tax advice. The participants may or may not, or may have, or in the future, early morning. The participants may have, or in the future, take interest in some of the assets discussed during this conversation. Please do your own research and consult professionals for any official advice. Cool. So we got a good sense of UXD, brief little summary there, and as well as Credix. But what does this recent announcement exactly entail? Can you provide a high-level overview of the integration? Kento, what do you think there?
Yeah. So we've been working with Credix for some time. I would say maybe 4 or 5 months. And we first started out with investing our insurance fund into the Credix pool, the senior pools directly, as a way to earn yield on our insurance fund. And it was safe. It was just a safe way to earn yield without getting exposure to crypto assets. And as the RWA or the LM module, kicked off, it's natural for us to kind of look for RWA protocols to integrate with, because we don't want to invest directly in RWAs, because it's very difficult. Like there's a lot of like legal aspects and a lot of operational issues. You have to do due diligence yourself. It's not like, it's quite difficult, and so you kind of want to outsource it. And so we've been working with Credix for some time, and we were comfortable with allocating some percentage of the ALM into Credix, and so we started working on it in the integration development aspect. And so we've been working on it for some time, and essentially what's going to happen is 50% of the 50% of UXD will be backed by Credix senior pool. So every time, basically, we're going to make this automatic. Right now, it's a little bit manual, where we try to target a 50% ratio to Credix and 50% to another protocol called Mercurial, which is like a liquid pool. But what's going to happen in I would say in a month, what's going to happen is that it's going to automatically allocate 50% to Credix. So if there's a situation where if there's less than 50% allocated to Credix, the next USDC that's used to mint UXD will go directly to Credix automatically. And if Credix is more than 50%, the next dollar will just go to Mercurial. So it kind of just tries to target 50% at all times. So we've been working on that so that we can manage the risk better. But yeah, that's basically what the announcement is about.
Cool. Nice balancing design there. So August, what exactly does the investment vehicle sort of look like? What are the asset types, the specific investments underlying, protections and yields, and whether or not these things are secured or not?
Yeah, exactly. And believe me, Kento asked these questions a lot as he was building out his integration. I gotta know just the deep dive that the team did, really impressive, and I'm excited about that auto rebalance. I think that's really innovative. So Kento and UXD is partnered into the senior liquidity pool that I was explaining a little bit earlier. And when we look at that liquidity pool, what is that ultimately giving you exposure to? So that's giving you exposure to a diversified set of deals made to lenders who are then issuing loans out to small businesses and consumers in Latin America. Today, we're live across Brazil, Mexico, and Colombia with about 32 million in capital deployed and over 2.3 million in interest earned across our platform. And so those underlying loans made to the end borrowers of the businesses and the people on the ground there are primarily things like revenue-based finance, hard asset-backed loans, SME loans, factoring, some student loans, some auto loans. But our bread and butter is really in the SME sector, the small, medium enterprises. And that's where the capital is ultimately going. Now, when we look at what's protecting that investment, I'm going to throw out a couple of buzzwords here and then kind of backtrack and explain why I'm throwing those out. So diversification, collateral protection, and alignment of incentives are three of the big ones that I want to highlight. So when we think about diversification, I've harped on this a lot, but it's that ability to spread your investment across a basket of deals. So if you think about a roof being held up by 20 pillars, if one of those pillars has a crack in it, there's a good chance the other 19 are going to be holding up that roof, right? So that's how I think about the liquidity pool. You're invested in, again, call it 20 deals. And that means that if one has some issues, and we haven't had a platform default to date, but if one underlying loan has some issues, you still have that other basket that upholds your investment. When we think about the collateral protection, you're in the senior most position. So you're protected from a financial perspective of the underlying classes, because in the waterfall structure that repays a debt facility, the senior position is the one that's always paid back first. And so you know that you're going to get your money before any of the other investors are in that vehicle. And on top of that, we have an alignment of incentives. That alignment of incentives is based on the fact that the one actually issuing the loan, that non-bank lender themselves, is in the most junior position. So what that means is that if they issue bad loans to small businesses and those loans go bad, they really have to eat their losses first. Their capital is at most at risk of what they're doing. And then after that, in the mezzanine portion is our underwriter. They're doing all the due diligence work on behalf of investors. So if they do a half effort on their due diligence and something goes sour, they lose their money before the senior pool does. So when we're looking at the senior pool, you have dual alignment of incentives. All of our loans and our deals are fully over collateralized. I think the average excess collateral spread that we have today is, call it around 120%, which is really important because before we even have to get to that waterfall mechanism, there's that excess collateral buffer that has to be eroded down. And again, as I'm talking about all these default risks, I do want to note that we have not had a platform default to date. So we are building this infrastructure to fully protect and be there to provide the greatest security that we can to our investors. And when we step back and think about the yield, again, it's a targeted 12 to 12.5% APY, all paid in USDC. I think our trailing 180 days for the second half of 22 was in the low 13% range, around 13.3%. So it does fluctuate a little bit higher, but we manage for that 12 to 12.5 range, all USDC. So that means we're not paying out governance tokens. We're not paying out inflationary tokenomics where we're just issuing a constant supply of some meme coin that loses value down the road. All USDC.
Amazing. Cool. Yeah, so let's go into maybe some of the key benefits for UXD bringing in like real world assets into the protocol. I feel like normally crypto has a bit of an allergic reaction sometimes, you know, to the idea of real world assets. But Kento, maybe you can go into some of those benefits.
Yeah, I think there's a few things. So one is the source of yield is different from crypto native protocols. So RWA yields are not influenced by crypto markets. Whereas yield in crypto markets, for example, if you use like a lending protocol, it's basically dependent on bull markets basically, because the reason people use lending markets is because they want to get leverage to speculate on crypto assets. So it's more volatile. In a bull market, the yield tends to go up, and in bear market, it tends to go down. But even in situations where where in a bear market you want yield, and when the yield is below the U.S. Treasury yield, it just doesn't make sense for people to deploy capital in crypto protocols or in these lending protocols. But by expanding into RWAs, you can now gain exposure to real world assets and gain the yield that you can always get. So if it's U.S. Treasuries, you can get like 4 to 4.5%. And then like with like Credix, you can earn like roughly like 12%. And this is not dependent on crypto markets. It's uncorrelated returns. So that's one reason we kind of expanded into RWAs. Another reason is the market size is just so much bigger. It's just much bigger. So the TVL in crypto, yeah, it's so much bigger because these capital are not just used for speculation, but they're actually used to build businesses, and they're actually used for like productive use cases. So the TVL in crypto is like 50 billion total, I think, across all chains. And then like U.S. Treasuries, just by the size of the U.S. Treasury market is like $20 trillion. So just the U.S. Treasury market is so much bigger than the crypto market. And so you don't have issues of scale, for example. And I think like the way crypto becomes bigger and integrates with the world is through these RWAs. You're going to have these more stable returns or uncorrelated returns that you can always get. And I think this is going to be like a way for crypto to kind of scale to trillions in TVL. So I think this is going to be the growth market. So that's kind of why we're very focused or interested in RWAs and how we can kind of integrate them with our stablecoin.
Amazing. In August, do you want to go into some of the benefits for Credix on the side of the partnership? And a little note at what Kento said at the end there, we can tie that into not just the benefits for crypto, but the benefits for like the end borrowers and like the real people and businesses behind these deals. Looks like Kento, did I freeze or?
No,
I think
good.
Okay. I think you're back on for me now, Adam. How am I for you?
Screen's frozen, but your audio's.
Oh, actually,
I think you're back now. Yeah.
That's what I get for
out of the
living
mountains.
up in the hills.
What can you do?
Yeah, exactly.
Yeah.
Exactly right.
We can hear you, so I think we can probably go. Oh yeah, you're back now. Cool.
Okay, cool. So I want to say, first of all, I think Kento nailed, from my perspective, the benefits to backing with UXD. I think that was an awesome answer. It's exactly where my head's at, backing UXD with RWAs. And from the Credix perspective, it's really exciting for us for a number of reasons. We see it, just like Kento said, expanding the entire cryptocurrency and Web3 ecosystem, which is really, really exciting to us. Collective ecosystem building across Solana is exciting. It also really helps us in our mission of being able to provide this capital to previously underserved communities in a much more fair and efficient manner with full transparency on chain. So as UXD scales, we're able to scale further that mission and build out new partnerships like our recent $100 and $150 million facilities we've announced with Clave and Atom, and these are really exciting, really innovative designs that we're going to be bringing online. And these types of partnerships with UXD are how we're going to do it.
Awesome. Yeah, so I think so Kento, you kind of touched on this a little bit, but what would you say, like, so many DeFi projects struggle with like scalability issues. How does this integration mitigate that constraining factor? I know you touched on it a little bit before, but I'd love to hear a little bit more elaboration.
It's hard to say. I mean, so talking about stablecoins specifically, there's already kind of like well-known methods of scaling stablecoins, I would say. So I mean, MakerDAO already does this, but PSM is basically a very scalable system because there's no friction. You just put one USDC in, you get one DAI out. There's no friction to that. But for example, over collateralized stablecoins have more friction because you have to put more capital in to get less capital out, and you also have to worry about liquidations. So it's not really like the borrowers or the people who mint the stablecoin, have to kind of always think about that. So it's a little bit less scalable. And then, like, for example, what we did regarding like delta neutral stablecoins, this was like not really scalable. I mean, it might change in the future, but at least last year it's really dependent on the cryptocurrency exchange liquidity, and it's hard to scale. So there's like these strategies that's easy to scale and some that are not. As for RWAs, again, like scalability it's much more easier, I would say, than very DeFi native strategies, to mint the stablecoin. So integrating RWAs for us is very scalable. So that's one of the reasons that we decided to branch into this area. I think another reason, like MakerDAO, for example, is branching in this area is because of scalability. And also, like, they have a lot of USDC that's just underutilized. that they can just earn, deploy in RWAs to earn yield. So I think like this is clearly the direction. Yeah.
Awesome.
Yeah, I think just to add on that, Kento, you mentioned it earlier, but I think you just have to look at this as a total addressable marketplace, a TAM, and you need to say, okay, what's the total addressable market of on-chain solely crypto-backed collateral? Well, it's whatever the market cap of the crypto ecosystem is. What's the market cap of, or the TAM of the real traditional off-chain world and economy? Effectively infinite, right? And so I think that's where the real scalability comes.
Yeah, like I think like I totally agree. Like the only way for crypto to go to like a trillion EVL is to somehow incorporate RWAs. I think that's just the way, kind of scale. Otherwise, it's just very difficult.
I agree.
Yeah.
I think so. My simple mind puts it into the analogy of backing solely with crypto collateral is kind of like living in a fish pond. Venturing into the backing with real world assets is like jumping into the ocean, right? It's infinite, it's growing, and it's probably not going to dry up in the next drought.
Yeah.
So that's how I envision it.
Yeah.
Yeah. And Kenzo, how do you think about the ratio of RWAs in UXD? If you can give a brief answer on that. You picked 50%. Is that hopefully going to increase over time, or is that going to decrease? How do you think about that for the protocol?
So it's 50% in Credix. As for like RWAs, there's other assets, right? So Credix is more emerging market loans, basically. But there's also assets like real estate loans. There's U.S. Treasuries, and if those assets come out, we would definitely want to integrate with them, and the total ratio can go much higher. It really depends on liquidity and credit risk. So far on Solana, as far as I'm aware, I don't think there's any other RWA protocol yet that that we can integrate with. But if there is any, we would love to integrate, and that ratio can easily go much higher. If it's like U.S. Treasuries, it would definitely be higher for sure.
Gotcha. Sweet. And so all of us, being crypto for quite a while, it's been amazing to see real world assets gain in popularity. You hear people like Vitalik, talking about RWAs and even regulated banks are starting to onboard some of their collateral into projects like MakerDAO, which is pretty crazy. That's definitely pioneering some stuff over there. So we kind of talked about this, but many are saying that real world assets are DeFi's most exciting use case. What's your overall perspective on the space as a whole? And assuming you agree, like why is this true in your perspective? Kenzo, maybe you can go first.
So the question is, like, do I think RWAs are the most exciting DeFi use case? Correct. That would be the question, I guess.
Yeah. Maybe just explain more about the context of like real world assets and like your perspective on them moving forward.
Well, the context, I mean, RWAs are basically, so actually it was interesting. Like there was someone on Twitter that was saying like we shouldn't use the word RWA assets because everything is RWA and you can't really distinguish, but it kind of caught on anyways. So I don't really have a preference. But basically like you can define RWAs as assets that are outside crypto. I mean, that's how people in crypto use RWAs. Basically any asset that are not crypto, like crypto native assets. So anything that's off chain are basically what people call RWAs. Again, like I'm very bullish on RWAs just because one of the uncorrelated returns they can get. There's also no scalability issues, and the TAM is just so much bigger. And I think like this is like the next evolution in DeFi. A lot of DeFi has been speculative, a little Ponzi-ish, when you kind of think about it. But RWAs have a purpose in that it directs capital to actual productive use cases, right? There's someone on the other end who's actually borrowing the capital to, build businesses, and there's like maybe like a student on the other end or someone who wants to buy a car or something. which are actually, you know, there's just, you know, there are some areas where there's a lack of capital, and RWAs kind of, you know, allocates capital to those use cases. So I think it's a much more, you know, efficient way to allocate capital. So I'm pretty bullish on RWAs.
Sweet. And
Yeah,
what is the next sort of phase of the? Oh, sorry. Go ahead.
If I could actually jump in on that, I just want to chime in a little bit, add a couple of thoughts from my side. So I think Kento definitely covered a lot of the aspects why this is so exciting. I do want to, and with a nod to that guy on Twitter who is a good friend and mentor, just say that when we're looking at RWAs in this specific context of what we're talking about, I really think that what we're doing here is the truest way of reinventing the financial world. Because what we're doing is we're taking traditional lending structures that have been in place for so long, and we're completely reinvigorating them, reinventing them with new transparency, new technology, and new mechanisms, and providing investors access to investment opportunities that were previously opaque or just simply unavailable. And so I think that when we talk about disruptive technology, I don't necessarily, and this is my non-trader perspective, but I don't necessarily see, you know, leveraged meme coin trading as something that is making Jamie Dimon lose sleep at night. However, when we're talking about upending the private credit market, then we start to really be that's where we really start to be making waves in the traditional finance ecosystem, and where we really are kind of taking market share, and not that it's competitive, but taking market share and reinventing in a large scale way. And so that's what has me personally so bullish about this. It's just a mission of reinventing.
Interesting. Yeah. So maybe let's go into some more like Credix focused kind of questions. So how would you differentiate Credix from the other credit protocols that are currently out on the market, and maybe other emerging ones as well?
Yeah, so I think that's a great question because we are extremely differentiated, and I want to be mindful to not throw any shade because I do think very highly of so many of the other platforms out there. But I'll just kind of touch on what I think are some of the key aspects to Credix that really bring it all together. It's that end-to-end technology stack and lending stack that I mentioned. And it's the fact that we have an in-market team sitting in Sao Paulo, Brazil, in our office, led by one of our founders there, who are outsourcing. We have a business development team there with some great folks out meeting with, getting to know these fintech non-bank lenders before we even bring them into the Credix network. And they're building out a fantastic pipeline. And then we have that deep due diligence and structuring provided by our internal credit risk structuring and legal divisions. And you just don't see that a lot of other protocols. So we're really taking from the traditional finance lending ecosystem that lending infrastructure, that due diligence infrastructure. And I come from that world. I understand it deeply, and I'm impressed every single day by the breadth of the work that these folks are doing. And then all of that is connected to our investors on chain by a really, really innovative tech stack that we can support up to 10 tranches in a specific deal. We haven't had to yet, but that capability is available. So incredibly sharp tech, deeply focused lending, and structuring in a due diligence vertical on the ground in market, understanding that. And I think that that's what really sets us apart, just that end-to-end process. And behind it all, securing it all, protecting UXD's investment is that over collateralization that we have built in with robust off-chain traditional legal agreements and third-party servicers ready there to assist as something may be.
Awesome. Yeah. So looking at some more like LinkedIn questions here from the audience, what is like the yield that is paid to the junior, the junior tranche and the deals?
Yeah, so that's That's a little bit more of a nuanced question that would require a bit of a deal by deal analysis that I think is probably too detailed for the scope of this. However, I would say that you can navigate over to the Credix site. It's credix.finance and dive into each deal specifically. And from there, you'll be able to see the economics of each one of those, the asset classes behind it, and even track down some wallet addresses for, again, that full transparency. What I will say is that when you're looking at a structured debt facility like we're talking about here, the junior investor is paid a higher return because their capital is more at risk. And because their capital is more at risk, it means that senior liquidity pool where UXD is invested and where the DeFi protocols we partner with are invested, it means that senior liquidity pool is more protected.
Gotcha. Well, we're coming up on time basically here. What's the best way to get in touch with the UXD team, Kento? Where can people reach you?
Yeah, there's a variety of ways. I would say either Twitter or Discord is best. If you go to our Twitter webpage, Twitter site, it shows our Discord link, and also our website has our Discord link. So that's the best way to get in touch with me and the team.
Awesome. And yeah, we covered a ton of questions, and I think a lot of people are interested in diving a bit deeper into Credix. So August, what is the easiest way for folks to get in touch with you guys and the team?
Yeah, thank you. So our team, actually, I should note this. Our team is split across 3 primary hubs: Antwerp, Belgium, Sao Paulo, Brazil, and New York. I'm, as Adam alluded to, hiding up in the mountains in Colorado personally. But if you're in one of those areas, reach out and try to sync up with a member of the team in person, please. I'm sure they'd be glad to. And you can head over to credix.finance to view our platform, sign up for our newsletter. You can reach out to me directly. I'm at Augwid, AUGWID on Twitter. My messages are always open there. You can also find me on LinkedIn at August Widmer. And please shoot me a message, reach out. I'm always happy to get in touch with you. And then Adam, from your seat, where can folks go to learn more and get in touch with you guys?
Yeah, I think the easiest way is to just head over to our website, so rwa.xyz. There's lots of forums on the website where you can click in and get in contact with us. But I'm also available on Twitter, and again in the app, a little chat will pop up there, and you can reach out to me, or you can email me directly at adam@rwa.xyz. Cool. So this is an awesome conversation. I think the partnership is pretty it's very novel and very exciting, and I think it sort of shows where the space is going to go in the future. So Kento, August, thanks for coming on and talking about the projects. Any final words, August?
No, I just want to say thank you, Adam, and Kento, thank you for your time. And to the UXD community, we're extremely, extremely excited. I think y'all have seen me in the Discord. If you have direct questions on Credix, just ping me there. Always happy to answer.
Amazing, cool. And with
Thanks
that,
for having, guys.
we'll wrap it up. See you guys.
Bye-bye.
See y'all.